Hi, I'm Arif Siddiqui. I worked 28 years in a very large multinational organization as CIO. Today I'm talking about the future of the fintech and banking. This is a very vast subject and it cannot be covered in a small, less number of, it cannot be covered in a short session. So what you will see very soon the number of videos from me which is covering this topic. And first, this topic is more of an introductory topic where we will uh, look into four more areas. One is what is the fintech? Second is why banks are looking forward for fintech and digital transformation. What is the impact of fintech companies, which is a technology companies becoming the fintech or financial technology companies, and how they are disrupting the overall environment. Uh, and fourth is that what are the regulatory challenges. So let me look into what is this fintech. Fintech is all about the financial technology and as well as financial institution. So when you will see that both are coming together, the technology, financial technology and financial institutions, it becomes the financial tech, fintech. So fintech is not only the technology, but where it is being implemented. So might be some of the fintech technology is not the banking. They are coming with the very disruptive way and trying to do the same thing what the banks are doing it. So let's look into what has happened in this space. So let me go back a little bit in 2008, where the financial crisis has happened. And during the financial crisis, most of the bank has been disrupt, and there was a huge financial losses as well to the some of the banks. And on other side, the either the regulation was in place but not been implemented in a banking, but some of the new regulation also came into the banking sector as well. And in this case, what has happened is that banks has gone and really focused to comply with these regulations. So a lot of focus in the last 7 to 8 years was on these regulation which came in and banks has to comply with. Very simple statistics which globally has been found that around 30% of the technology investment, the most of the banks has done to comply with the new regulations and bringing the new technology to make sure that the compliance has to happen. But compliance is not all about technology as well. So the banks has invested a lot of things, like they hired a new people to do this. They have established the new processes to comply with, and all this is a cost. So if you really see that last 8 10 years, the bank was very busy to do this. So let look into that. What was happening in this last 8 years in the Silicon Valley or the technology sector? So you will find that lot of new technology came in during the last 8 years, and they have changed the overall customer experience. They changed the overall lifestyle. Social media has gone and really given a new view to the people that how they have to change their life and doing things. So all this technology, which is, you can call it smartphone or mobile areas, or you can say that the area where the artificial intelligence was coming in. There was an area where a lot of changes has happened in the area of blockchain as well. So all this technology was coming in the last 8 years, and the bank was trying to address something else. So bank was looking forward and sorting out the issue of the regulatory challenges, and they have not been adopted lot of this technology in last 80 years which came in. However, they have gone to some of the areas due to the customer experience and the pressure on the bank that they have to give some solution to the customers, which is more towards the internet banking or mobile banking. Let's look into what has happened during that period in US. So I will share some of the statistics now with you to understand the overall scenario. So this slide is all about the three different periods, which is 1966 to 1967. Second period is 1967 to 2008, and the last one is a 2008 to 2017, or the current period. Usually the people talk about these three periods as Fintech 1.0, Fintech 2.0 and Fintech 3.0. So if you see that during the first 1866 to 1967, nothing has been innovated. The only ATM has been invented and not been fully utilized or not been fully implemented. It is just invented. And another thing was invented called NCR register, which was replacing kind of old typewriter and other things during that period. But when you come to the second period, which is 1967 to 2008, and you can see that the huge computerization came into the banking sector. That is the Fintech 2.0 area, where most of the bank has gone and automated their back office processes, they have automated their front office process, and they have invested significantly into the computerization of the banking. And the same period, the number of other products came up which supplemented to the whole automation and digitization, which is more of a ATM, CDM, cash deposit machine. Also debit card and the Visa card came in. So both Visa and MasterCard, you can see, came into the same period. And one more thing has been already started in this Fintech 2.0 is online banking and electronic payments. So it is not started after 2008, but it has already been started online banking before 2008, and quite a number of banks has started their mobile banking and their their internet banking and the mobile banking. Electronic payment has already been started through the internet banking, and one more thing is the SWIFT came in, which has changed the payment scenario, and not only the within the countries but also the cross-border fintech. Not only the cross-border but also the in-country payment solutions as well. We should jump on to the 2008 to 2017. 2008 to 2017, you can see most of the banks has gone and implemented the internet banking and mobile banking, and that is the one thing which really given a large scale to their own customer in the banking, and that's how the customer experience has been started changing. But in the meanwhile, you can see the industry is been changing as well. The mobile phone has gone from a normal mobile phone to the smart mobile phone, where the customer can be able to do more. People who was doing simple the email, now they are on a social media and they are using Facebook, Twitter, and other social medias, and that's how the customers' demand has been changed, and the customer is demanding more and more of internet and mobile banking. Banks do say that we do have a lot of functionality in a mobile banking and internet banking, but reality is that it is not as per the expectation of customers, and we will discuss later on that what are the difficulties currently in building the right customer experience in the area of mobile banking and internet. The second area is online clearing. So payment between one account to another account or one person to another person has already been established. It is there with the internet banking and as well as available on a mobile banking. It is mostly it is online real time. Some of the places it is real time, but not in some areas it is on a online but not real time. In some of the countries, the back and engine is doing the clearing on almost the same day, but it is not really the real time. But quite number of countries, the online clearing is totally online real time. Real-time bill payment, that is another area where a lot of advancement has happened, and all the bills, which is utility bills and all, the people can be able to pay through these mediums. And also there are areas where people can be able to pay when they are buying things from a various online channels, like if anybody is buying from Amazon or Lazada or Alipay, they can be able to directly pay online to these people, and that is available by using various mechanisms, like it is attached either through a PayPal or the Visa or MasterCard, and that is the way they can be able to transfer the money today. Another area is mobile money, which is quite often we call it digital wallet. And digital wallet is one of the area where people can have some of the money into the virtually on their own smartphone, and they can be able to work and they can be able to pay directly by using that currency. And that is coming up more and more, especially in the area of telcos, because they have a huge number of customers and they are not the bank. They are looking forward how they can be able to allow putting some small money into their own wallet, and their customer can be able to pay the bills, and as well as they can be able to buy certain things from the various merchants in the industry. So there is a big push on a digital wallet. Lot of new digital wallet is coming up, and very recently in Malaysia I have seen that this touch and go, which is the wallet of which is being used here very well, and Alipay both created a joint venture, and the local regulators has allowed them to do that. So these are the new disruption and new things are coming up where the digital wallet can play a very vital role in the coming years. The last but not the least is RTGS. RTGS is transferring the large fund from one account to another account. It is more on a B2B basis, and RTGS being implemented online real time, so people can be able, or company especially, can be able to transfer the money to another account or pay the large amount to another company by using the RTGS. So this is what is a very high level that what was happening during these periods, and how banking technology has been evolved in the last 100 years, and you can see that the most of the thing has happened in 2008 to 2017, although the lot of discussion is that banks has not been able to do enough what the customer was looking in or what the new technology came in. So really you can see here that much of the new technology is not being used during this period, and we will talk about later on that what are the new technology which is coming in. So let me go back to and I want to show one more thing to you, which is the slide which is showing that what banks can do to adopt and survive. And if you see it, what happened in 2008 to 2012, you can clearly see that transactions going online and mobile in the US. And you can see the comment of John, CEO at Wells Fargo, and he said that we are continuously reducing the square footage at the bank, which he mentioned 117 million was in January 2009 and 92 million in 2016. So you can see that most of the banks are really focusing on mobile banking and internet banking. I will show you another area which is very interesting, in fact, to understand the overall channels level and transactions level. So if you see that in a channel level, open a deposit account, it is on an internet, it is 33% today. And on a mobile it is 19%, whereas the in-person is still 73%, and you can see the most of the people who are trying to open the account, they're supposed to go today to banks. Sorry, I not showed you the slide earlier. So this is the slide which I was talking about, that 33% is internet, mobile is 19%, and in-person is 73%. So what I was talking about, a lot of people has to come to the branch or the bank if they are really looking forward to open the deposit account even today. So this is the statistics which came from the December 2016 digital banking report from the Nelson. And the other area is the checks, which is cash or check. And that is still 94% in person. So people, if they want to bring the check and want to take the cash, they are still supposed to come to the branches. 94% people are coming to the branches, and only 2% people are taking the cash from the ATM in against the checks. So there are certain banks who are giving this facility to take the cash out against the check through the ATM. But most of the cases, the bank only allowed to deposit the check to their accounts through the check deposit machine. Or if they want to deposit the cash, there is a cash deposit machine which they can use for the cash deposit of a cash. Now deposit a check in its entirely. So deposit a check, 60% is still in person, where the 30% is at ATM. So really ATM is playing a very vital role at this stage, in addition to the branch channel, that how the people can be able to come and drop the check. Financial advice. So if the people want a financial advice from the bank, 31% from the internet, 15% from the mobile, and 59% is still coming to the branches. So you can see that when it is coming to the channel, the bank has not done enough to provide the services to the people that very easily they can be able to use by using their smartphone for the channels. Still the technology they are looking forward in terms of eKYC, how eKYC can be done to open a deposit account, and that is a difficult area because they have to make sure that some of the data has to be available to the bank to open an account, and physically sometimes the banks nowadays wants the person should come to the branch. So that is the area where quite disruption will come, and you will see soon that the number of options will come into this area of the channel. The other area is definitely the deposit cash. One of the thing is quite often the regulator is talking about, and as well as the banks and the customers are talking about, and that is how the cash will continue be the instrument to do the transactions or to use into the shops to buy things, and that is the area which is dropping significantly. So you can see that when the ATM came into, ATM has allowed again to the people to take the money from the ATM on an off period where when the branches are not open. So one channel to another channel has been moved, but still it is not moved from a cash as a note to the virtual wallet money, and that has to happen in a next few years of time. That how the cash has to be utilized less, and that is the interest of normally the regulator and the government, because they are spending millions and billions of the dollar to print the notes, and definitely it is an advantage of a productivity that if notes or the cash has to be less utilized. Let me come to another slide which is very important, and without that we cannot be able to talk about is transaction. What is the status on a transactional level? So if you see the transactional level, account information, the people who are looking for account information, they are 73% are using internet, which is a huge impact and a lot of improvement in this area. The people are ready to use for account information through the internet. 33% people are using mobile, and 18% people are using branches or the channels which are impersonal. Maybe it can be ATM or maybe it can be branches. So transfer fund. The second, this is a transfer fund. 69% of the people are using internet, which is quite good in fact, and some of the countries has done an extremely good job in that, and some of the banks has done a good job to put this transfer of fund available through a channel of internet, and 24% is with the mobile. So you can see that still mobile is not the main channel for the fund transfer. Still the internet is the main channel, and that is one of the area which in a few years time you will see the change will come. 13% at in person of the branches, so you can see that it is reducing significantly. And bill payment. So if you see the bill payment, it's a very similar story what is the fund transfer is, because both goes hand to hand in fact. And what happened is the 69% of the bill payment is currently going with the internet, and 21% is going through the mobile, and 16% is impersonal at branches. So it's a very high level view to you that how the channel is being used today into the banking sector, and what are the people are using it. So the main area is what customers demand is, and you can see more and more people are moving towards the channels which is internet and mobiles as compared to the branches. So let's see what is the impact on branch network. So I'm showing you one slide which is more of a US, and you can see that in US since 2009 to 2016, 9,000 branches has been closed. This is an extremely very high number, in fact, and you will see this is the same period where this the financial crisis was impacting to the banks, and you can see what was happening in 2006, 7 and 8. So still the bank was opening the branches during 2006, 7 and 8, and suddenly you can see what has changed in 2009 is the bank has started closing down the branches in the US. So if you see the global scenario, globally what is happening, the 4% of the branches is being closed every year globally. So if any country, if there is a 10,000 branches, you can see that around 400 branches is being closed annually. So that's how, or 40. So if you see that any country, and if it is or any bank is having 100 branches, out of 100 branches 4 is being closed globally. So whether it is a small bank or the large bank or the small country or the large country, it is the trend. It depends on the country by country. It depends on the how the smart mobile and the internet availability is in the country, how much the people are comfortable using these two channels, and depending on that, now is banks are making a decision to close the branches. But branching will be one of the main channel there. In fact, the ATM, CDM, check deposit will be there as a very, very strong channel. It is not going anywhere. The branches are being closed, which is 4% per annum, is because the people have migrated to these channel, which is more of an internet and mobile banking, and that's how the banks are trying to make the branches smarter and closing the branch in fact. So lot of bank has decided not to close the branch, but what they did is that they have gone and created a large branch into the smart branch, which is a very interesting model, and I think this is the best model in a way that how they can see that if the 4% of the customer has, or 5% of the customer of the branches has been moved to the other channel, they can see how they can make the branches smarter and smarter. And that is the area where they can be able to create productivity and cost save. Let me go to the next slide, which is also talking about the number of fintech firms funded by year. So let's move to the fintech companies. And during this, what I was talking about, the banks was having a challenges on a regulatory, and the fintech or the technology companies was having a huge innovation, and they created a lot of new innovative technology, and that's how the new things or new companies are coming up. So if you can see what happened in a fintech during that period and how many companies has been funded. So you can see 2012, 2013 and 2014, the largest number of companies has got the funding. and that is the area where uh, uh, funding was coming up. And again, I can show you that 2012 to 2014, the largest number of companies got the funding from a VCs and other ways. And that is the area where the most of these fintech companies has grown up, and a lot of new companies came up. So you can see how the thing has been changed overall in uh, so you can see how the thing has been changed. Uh, Uber is a one of the example that how they came up, changed the overall thing, and really disrupt the market of taxis was in a road. So they came up and said there are people who have a need, and there is a people who can provide them the service, and they integrated these two people with the app. And this is not a Uber like one case, which is we can call it in a taxi. And they have given a new mindset to the people, that how the people can be able to see through that they can come up the more and more ideas on a same nature to provide the better solution to the world. So they can see that what is the number one problem of the society, and these people go through and see that how they can be able to interact the two community, like the people who has a need and the people who would like to use that, and how they can develop a technology to use very easily this and provide the solution. The second, you have seen the Spotify, which has changed the overall music industry, totally disruptive, and you will not be able to see many shops of music anymore. You cannot see many online shops as well on music, and the people are using that. So how someone can comes with a very new technology, and it can be totally disrupt the whole thing. And one of the another example is Alipay. Alipay in China, they have changed totally the new environment of the payment for on the people which buying the things. And this company has created a huge supply chain, that how people can be able to buy online, and how they can be able to get the goods within a shorter period. And around point 0.8 billion people are using today Alipay in China. And now this company is coming out from China and going to the other Asian countries and trying to build the same model, which is called supply chain, where a small guy in a village who is making things, and he is only supplying to either the village or the city. Now they have the ability to supply it to the whole world, and that's how it will gets very cheap as well. And only challenge is how they can be able to build this whole supply chain as well. So you can see the lot is getting changed, a lot is new challenges and new things are coming up. And a few areas where the people are coming up from a fintech companies or technology companies and trying to provide the solution. So I can make give you three different scenarios. One is R3. R3 is a consortium where the 20 banks has signed kind of agreement with them for a payment transfer from a cross country. So currently SWIFT is being used in a banking, which is taking a few days to reach the fund from a country to the B country. And a lot of challenges are around, like a same thing, that when the fund is being transferred, what rate has to be applied. Banks need more information of the customer, beneficiary, and as well as who the money, who is receiving the money. And also there is a lot of sanction things in it. It's not all about only about of the country sanction, but also the naming sanction and other sanctions are there as well, and it takes some time. So regulation has to comply when cross-border payment is coming. And these people are trying to come with the solution by using the blockchain, which is the new solution and new technology, that how the fund can be transferred from one country to another country. And they are using a new blockchain which is called Corda, and R3 is doing a pilot project with the 5 banks. Same as Ripple. Ripple is another company which came up with their own Ripple coin, and they are using their own blockchain, which is and doing the same thing, like in a sense how they can transfer the money very fast from one country to another country, and by providing solution through the blockchain. And there are few more, like one is Abra, is a US based company, a very small company, but they have put up a supply chain kind of mechanism by using the Bitcoin. So they are using the Bitcoin to transfer the money from US to Vietnam to Philippines, and that goes very, very fast. Like within a half an hour, 1 hour, these people can be able to get the money over there. And so all transfer is happening through the Bitcoin. So these are the companies which are not the bank, and they are coming with the solution to resolve the problem and giving the solution to the customer and changing the customer experience. And let me tell you, one thing is very, very important, and everybody has to understand. The customer has to decide what they have to use at the end. And this is the important thing, that if customer feel that something is good for them, something is very simple to them, it is very cheap to them, they will go and use it, regardless of whether it is coming from a bank or coming from a technology company. So here is the key, in a sense, that when I'm talking about technology companies which are coming up with a technology solution, and a financial industry which is purely doing the providing the financial services and product to the customers, how two can interact together and be able to provide the better services. And that you will see a more in future. In fact, in some cases it will be disruption, some cases it will be very good coordination and collaboration. I would like to share something more to you, which is pertaining to the area, that what are the areas these fintech companies are working on. So I spoke to you one of the area which is payment. So the largest number of fintech companies today is trying to resolve the problem of payment. And so it is a payment from a person to person, it can be the payment from person to the company, it is B2B as well, it is within the country payment system as well, it is a payment to the merchants as well, and it is payment from across border as well. So the largest number of fintech companies today are focusing and building up the new payment solution, who should be able to give a better, faster and cheaper service to the customer. And that's how they are looking forward to put something which be on a very simple, on a mobile. And you can see that the challenge now is on a payment side is Alipay is there in China, which is a huge disruption within the country and now coming out. WeChat is another one which is available, and they have built the technology which can now they go and really showcase it to others. And third one is a Taz is coming up. So Google came up with a new, very recently, the new solution which they are implementing in India as a pilot, and the number of banks has signed up with them, and they are implementing Taz over there, and the one of the large company which is Google is coming into the India as well. And these companies are focusing on, and they have a huge client base. The WeChat and Alipay is having around 0.8 million each, And Google is a huge, around a billion customer they are having it. So the more and more these players will be there, you will see the more option to the customer, and then the choice will be at customer that what they can be able to use it. And what is the key in this whole thing is that who will provide the supply chain along with the payment. So normally the fintech companies see about it that only I can be able to provide the solution which the payment we can make from A to B. But people want a one solution. People want an end-to-end solution, and especially the small SME companies, they need a supply chain. So either they are selling goods on the internet, or they are people are buying with a very on a large these bazaars or Lazada or Amazon. Actually behind these are the all SME companies. And if the company, these large companies cannot be able to provide the full supply chain, it is very hard that they can be able to take the buy-in from the customers. So in the next 2 to 3 years, you will see that what people will like. So they can come up and really put their things on a table, but people will make a call that which solution they are looking for. Data is another area. I mean, if you see the data, what has happened in many years, and artificial intelligence is not a new thing. Artificial intelligence has been created somehow around 30-40 years back, and now this has been matured. So one of the area is that in a financial industry there is a huge scope or using this big data. One is understanding the customer, and that is very important, that the customer, and every bank is having a huge database, and they know that what customer is buying what, and what customer is using what service, what customer likes the product, which kind of customer likes the product. But putting up of a very sophisticated artificial intelligence based system to understand that data. And nowadays it is coming to the machine learning, and machine learning is helping a huge, that you can pump the data to the machine, give the algo, give the your own rules, and then you can see that what customers are doing it. So you can understand the customer better through the machine learning of a data. And you are seeing currently is that Facebook and Google is using extensively this machine learning and artificial intelligence, and that's how the other players are also looking into to use this into banking, or whether it is insurance companies, or it is healthcare area, or whether it is a lawyers. Everywhere the data, big data is there, and this has to be utilized. This has to be give a value of it, and you will see very soon that more and more companies, fintech companies, will be coming to provide the solution on artificial intelligence, on a machine learning. Investment is again like wealth management is a lot where the banks are giving the advice to the customer where to invest, and a lot of banks are looking forward a solution of a robo advisory. And the robo advisory can be a very small, in fact, to the customer which are trying to use on a very small scale personal loan, or it can be very extensive to the wealthy people as a wealth advice through the robo advisory. And robo advisory is what? Robo advisory is using the artificial intelligence and giving it to and giving a machine learning, and creating an environment where the machine can be able to give the same view what any wealth manager is giving it to the people. So a lot of cognitive computing has to come into, and this is the third largest area where the fintech companies are working on. There are other areas which I will not touch here, but you will see that fintech companies are coming on a financial planning, crowdfunding, digital banking, security, insurance, blockchain, and Bitcoin. I'll not talk about the cryptocurrency here. It's already has given a lot of views to the people, in fact, and let the time has to come up and see how it will go. Let me come back to the issue which is I started with, and that is the area where
I talked about regulatory challenges. So if you see this slide, is still 22%, and this is the survey which is DBR Research, sources DBR Research, December 2016 digital banking report, and 22% is meeting regulatory and compliance satisfaction. And this is the three question strategic priorities has been asked during the 2017 from the financial industry. So when they put the question, what are your top three, the people, 22% put up the regulatory challenge into the top three. So it's still the challenge of a regulatory compliance is still there, and banks are working on that, how they have to go and really work on that challenge. So if you see some of the areas like, so banking, there is not one or two regulators. There are number of regulators in the banking area. So one is a country, if it is a large multinational bank, so each country has their own regulators, and these are the country regulators which they are putting some of the regulation in the country, and the bank has to comply with. And if it is a multinational, there is a DFS. DFS is in US, and there are multiple zones over there. So if somebody one is having a clearing, suppose that in New York, that is called DFS Zone 12, and the all regulation applies of a DFS to that multinational bank. Even any dollar payments are happening, actually it has to go through the clearing, foreign currency clearing, and that's how the DFS regulations comes into. Another area is called payment regulation, and as well as the PDP. So PDP is personal data protection. So lot area where the banks supposed to provide or take care about the data as per the local regulations on personal data protection. And it is now going to the cross-border, because European Union has their own personal data protection laws, and the countries on other sides are having their own. So it is a multi-fold challenge that how the banks or the financial industries has to comply with this challenge. But one of the things which you can see here in this slide is that the number one, 71% of the people said that redesign and enhance digital experience for customer is the number one agenda of every financial industry for 2017. It is rightly so, and I think they understand that the people will decide at the end that where they will go. Now this, like the banks are having with the 100 years old bank or 70 years old bank, and they feel that probably the customer will continue engaged. I think this is a new generation. This connectivity somewhere is there, but not all the time it is there. So it's a new breed, it's a new young people. When they are coming up, they are looking the customer service, and all the focus in future will be on customer service in a fintech. I talked about the data analytics, which is the 50%, and 41% are saying reduce operating costs. So reducing operating costs is a huge piece as well, because cost income ratio is not going down. And second, in the last many years, you will see the bank are struggling, especially in the area of retail banking. What is happening is that they are trying very hard to reduce their cost income ratio, and now there is a huge opportunity for them to reduce their cost by doing certain things. So one of the things that happening, and a lot of fintech companies came up with a very good solutions, which is called robo process automation. The robo process automation is an area where it is a software based robots, and these robots get the knowledge and understanding how the human being is processing any of the transaction. So whatever the human being is doing, whether it is a data entry, whether it is decisioning on the some tables, or so all this has been given to the robots, and robo process automation will take the some of the jobs on a back office, and that's how the banks are looking forward to reduce their cost. And that is very, very important, because if they would like to be thin, and as the margin is going down, it is the only way that they should be focusing on. So you can see that 41% people said that they're in their top three strategy for 2017, reducing the cost is very, very important. So let me move it to, so it's spoken a lot about the regulatory challenges in the banking. The last I want to see how this regulatory challenges now coming to the fintech companies. The fintech companies which are not the banks, and they are trying to do a lot of things which is somehow or another either the country legislation is there, or the law is there, or the regulation is there. Now how they can comply with those things, and whether they can or not. You heard about it. There's a number of banks in US which is not got approval as a bank, but they are doing the functionality of the banking. Although it is on a very small scale, one or two are very much gone into the university level and doing the banking, but they are doing banking, which is basically requires regulation, and all are thinking that moving forward they can be able to get the approvals, whatever the requirement is. So I want to showcase you one of the slide, which is a very interesting slide in fact, and why I put it at the end is how now the fintech companies are started seeing the challenges on a regulation, on AML, KYC, also they are looking forward on a data security area and the privacy area, and that is something that now the challenge is coming to these fintech companies. And some of the countries did very well. In fact, in Asia, I have seen quite a number of countries came up with the sandboxing. And sandboxing is a fantastic area where the fintech companies has to go and try to work with the regulator and demonstrate all the controls built around as per the regulation, or if it is a innovative, even they don't want to follow some of the regulation, the regulator has to understand that still it can go. So these sandboxing will allow a lot to these fintech companies that they can be able to do differently, and some of the regulation which is in the banking sector might not be applied into the fintech companies. And there are areas where they will push them to put at least some of the regulation as well. So now these regulatory challenge which bank was facing since last 8-10 years, it is now fintech companies started smelling as well. So when they will come to the out of the boxes, like in a sense companies which are Alibaba or WeChat, then when they will go to the other part of the world, they will see that what they're supposed to do in this area. Same as some of the companies which are doing on a cross-border fund transfer by using a blockchain or the cryptocurrency, they have to understand that how they can be able to come to the level where they can make comfortable the various regulation. So this is the first part, introduction, and hopefully I will come up with some of the series and discuss in detail some of the subject in the fintech. And thank you very much spending time with me.